Well, hello, Maverick Traders. Welcome out to your Psychology Corner. Today we are going to explore hesitation and kind of the pitfalls of it. We're going to talk about, personal experience with this, maybe even compare it a little bit to relationships. We'll do all sorts of stuff. So come and lay down on the couch and let's talk about psychology a bit. As always, just a quick reminder to make sure that you follow your trading plan, make sure that you think about psychology and how it plays a role in your trading. And really what we're designing the trading plan to do is basically guard against some of these common pitfalls. Basically, put stopgap measures in place where we can identify them. We can potentially flip them on their head to use them to our advantage, where we start to feel certain trappings, certain emotional decision making things, and we can identify them and realize, hey, not only is this giving me the wrong signal, it's actually an opportunity here. I've told the story before about a trader that was having difficulty holding on to winners, and then he would have a big gain and he'd try to look for excuses to sell it. And I said, look, because you want to sell, if you do anything, double your position size, which was kind of, I wanted a shock and awe response. And lo and behold, the trade kept going, right? And he didn't double his position size. And then it happened again, and he didn't double his position size and took profits. And so I went and traded it and made money and then said, hey, look at this opportunity. So, anyway, in some cases where you find yourself at these turning points, you can actually turn these emotions in your favor. So, let's talk a little bit about hesitation. What causes it? Well, there's a few root causes. Some of those oftentimes come from a lack of confidence. It could be you lack confidence in your trading plan. It could be just personal. You lack some confidence in your own trading ability. This is why a lot of people trade off of CNBC and some of these programs where they'll say, well, those people probably know more about the markets than I do. Let me just follow them. Well, that doesn't work because ultimately trading isn't about some ticker symbol. It's about your management. It's about your ability to work through the positions and you knowing what you're going to do and how you're going to manage it when it goes against you and when it goes for you and so on. So usually people kind of fall on these crutches of, almost I can blame them if the problem goes wrong. It's Kramer's fault or something. You need to develop that ability, but also keep that confidence. A pessimist in the market, someone that doubts their own ability, they'll let the market push them around because if the trade goes against them, they'll say, oh, the market, I'm just no good and so on. If the trade goes for them, they'll say, well, I'm no good. I better hurry and take it off because I'm so bad at this that I better take the profit while it's there. And you'll make these really poor decisions or hesitate because of your lack of confidence. Fear of the unknown, which is really what hesitation is, right? If we knew for certain that this was going to work, we would do it. But we're fearful that maybe it won't work. We don't know what's going to happen. What's going to happen with right now Russia, Ukraine, and the war? What's going to happen with COVID? All of these things that loom out there, and people are constantly fearful of them. And then just fear of being wrong. As humans, when we take a loss, it can create a lasting effect on the next trade and cause us to hesitate because we just experienced something that was no fun. And so that can have a little bit of an emotional damage, right? So I love this emotional cycle of a negative trade because I find that, a new trader is maybe not as hesitant as someone that's been burned a little bit, right? And that makes sense. I mean, think about it from the standpoint of pain. Let's go to a pain that's tangible. Let's say that you touch the stove and it burns your fingers. And it wasn't heated up. It didn't look like it was hot. It wasn't red, whatever. The next time you're going to be very cautious about going and touching that stove. Even if you're, quite confident. You've stared at the stove for hours. You know it's not on. You know it's not hot. How likely are you to just stick your fingers on there you're probably going to touch it and just, really carefully kind of test it. There's going to be hesitation, right? Even if you kind of know that this fits, whatever it is, there's just going to be some hesitation because there's pain involved. And trading can create pain. Look, money creates all sorts of emotion, and pain is one of those. When we have a losing trade, we feel it, believe me, right? And you get used to it. I mean, to be honest, I feel a lot less emotion. I don't feel a tremendous excitement from clicking the button anymore. But when you're newer to the markets, the first year or two, there's an excitement level of placing a new trade. There's a pain when a trade goes bad, and it's tangible. It's almost like getting cut or burned. It's something you feel. And so when we think about this, before the decision is made, there's kind of the rational thought process. And this is probably where the hesitation is a lot of times coming in first is, boy, that last one didn't work. Am I sure this one's going to work? There's all this hesitation because what we should be looking at is the win-loss ratio, the expectancy of the trade, and so on. Instead, those past emotions kind of linger. Let's say we get into the trade though, and obviously, there's a certain amount of excitement. But again, hesitation could be involved when we're in the middle of a trade as well. Think about it. What's your plan? How are you going to manage this trade? Are you going to take profits? Are you going to hold it? And all of a sudden, there's some hesitation. Boy, should I be sticking to the plan? Last time I did this, I should have taken the profit early and then the profit vanished. And so all of a sudden we start doubting the plan and we go, well, maybe I should change my plan. Maybe instead of holding to expiration on this style of trade, maybe I should be taking profits when it's made 70% of the profit. Or and all of a sudden we're in the middle of a trade and we're debating whether our plan is even good. We're hesitating in the process, whether it's because of our own lack of confidence in ourselves or our plan or whatever it is. That's probably not going to yield the best results, right? There's hesitation due to worry. What are the hesitations? Think about it. Well, if I take it off, boy, I'm hesitating to take it off because it'll probably make even more money. And I'd hate to sit here and watch it as it grows even bigger. But boy, I'm also hesitating because I probably need to close this out. If I don't close the trade right now, then I'm probably going to be in a situation where it's going to go back against me and the profit's going to vanish. And boy, that would be painful as well. And so there's this hesitation of, should I take it? And again, it's not even following the plan, all those things. It's like these hesitations of, what should I do with this position? Because I'm worried about missing out, but I'm also worried about not making the money. And then obviously once the trade is done, there's like the residual effect and how it can impact and cause hesitation in the next trade, right? This, here's what happened on this one trade. And all of a sudden we can extrapolate from one situation that might have ended up really good, really bad, medium, whatever. But all of a sudden we're going to start taking that one trade and creating hesitation for the future, right? And it happens, especially if it's something that creates some pain, some real emotion. All of a sudden there's a hesitation of, am I doing the right things? And, is this the right process? And so on. And these are not things that we want to be doing. Obviously, if there's times where you might need to change the plan and so forth, but we don't want hesitation at every step. Obviously, that's not going to yield the best results. If we get into in the ring, if you're hesitating, you're probably getting smacked in the mouth, right? And as the great Mike Tyson said, everybody has a plan until they get hit in the face, right? And so once you get smacked in the mouth, it kind of changes things. And this gets back to that emotion. So trading can be a little bit like relationships. We could be taking baggage into the next trade, into the next relationship. It could be self-esteem. These are common. Some believe they cannot attain success or don't deserve it. It's almost like instead of, really believing that you can achieve it, some people kind of have a little bit of if you've ever read the books, The Market Wizards, there's a great section in there that talks about everybody gets what they want out of the market. And some people want to lose. That sounds really strange, but some people legitimately want to lose. They want to kind of be a woe is me, this always happens to me, these things are, and so you kind of have this, hey, this desire to kind of be in that mode, and you have to flip the switch a little bit. You have to change to where you deserve success. You can achieve success. You can reach these levels. And sometimes you have to make that switch in your brain. Pain, like we talked about, you don't want to feel that pain again. Think about a relationship and a bad breakup or whatever, a divorce, whatever it may be. There's a lot of hesitation that goes into, trust and believing that things are going to work out and so on. It's easy to become jaded. And look, people become jaded about the markets all the time. And so this is why people love to talk about, the market, it's rigged and it's for the look, the market is a cast of characters that all have emotional swings, right? And there's euphoria and there's depression and there's all these emotions in the markets. And it's true, if you fall into the traps, you're going to experience pain. You're going to be one of those that becomes disappointed in the results and whatnot. And this is why I always say you've got to flip the switch a little bit. You've got to think differently than the public. If the general public is, rushing in to buy, like energy recently, it's a little bit of a warning sign. It doesn't mean that in the short term it has to go down, but it certainly doesn't lead to usually the best of results, right? The public at the major turning points tends to get it wrong as a general rule because emotionally they're kind of on the opposite sides of where they should be. It's kind of when stocks go up, they don't feel like they own enough, so they do all their buying. And then when stocks go down, they feel like they own way too much and they do most of their selling, and they're just kind of backwards as a general rule. You can also be stuck in regret, which can cause hesitation. Again, regret of like, if you're in a trade, well, I should have done this yesterday. It's very easy. How many of you, by raise of hands, have ever done this? You sell a position and you immediately watch it to see what it does over the next day or two, just to, kind of grade yourself. Oh, it goes even higher. Oh, I'm such an idiot. What? Of course it went higher, as if you can pick the tops and bottoms perfectly. And then, the one that comes down, oh, I nailed it. I'm so good. And it's like you grade yourself. Well, of course, it's going to move. It moves every single day. So the idea that you're going to capitalize on the whole amount and buy at the bottoms and sell at the top, I mean, that's just unrealistic expectation. So you can't live in a regret cycle. You're not going to buy the perfect bottoms and sell the perfect tops. That's not even what you're trying to do. You're trying to capture a move. You're trying to probably be somewhat of a swing or position trader. So you're trying to capitalize on a stock that's going from the mid 40s to the lower 50s. You're not saying, well, I'm going to buy it at the perfect bottom and sell at the perfect highs. So you can't live in kind of that regret cycle of, well, I should have done this yesterday. I didn't. Now it's gone against me. Well, now I can't do anything. No, make the right decisions that you know are the right decisions. That's why you put them in the plan. That's why you have this criteria. And live with those results. If you have a good trading plan and you have the right approach to the markets, it's going to yield positive results. So avoid that regret. And a great example of that is, kind of when something goes up, you'll often see this where, like, if something goes up sharply and people don't take profits up here, and then it dumps on them, they anchor to that higher price, which is just hesitation. It's regret. It's, well, I should have done it here. Now I can see that. So I'm not going to do anything until it gets back up to that level. Well, here's the thing. It'll probably, either A, not get there, or B, if it does get there, it's probably going to blow through it and go even higher. So kind of anchoring to a prior price is maybe not the best approach, right? And that's what regret will do. That's what hesitation will do. Oh, I should have done this. And so instead of getting out here, even though it wasn't at the tippy top, but you should be getting out, well, I should have got out yesterday. Well, I'll wait for it to touch that price tomorrow. Oh, dang it. It went even a little lower. Well, I should have sold yesterday, I guess. I'll wait for, uh-oh, whoops. Oh, no. Well, now I can't sell it, and away it goes, right? And you either don't recover, the trade expires, max loss, or you finally do get out at this price, and frankly, you should have stayed in because it's going a lot higher. You just can't kind of get stuck in that game of worry and feeling like you should be always getting the absolute best price. That's just not realistic, and it will create problems. So the key concept here, self-awareness, is the cornerstone of behavior change. Think about what we're talking about with hesitation and just start asking yourself, and maybe write it out. With each of these psychology classes that we do, it's probably good to just kind of say, well, where am I hesitating? And just have that word written down and then think about your decision making process and say, okay, am I finding myself in hesitation mode anywhere along the way, be it before the trade is on, be it during the trade, be it late cycle of the trade when I'm ready to get out or whatnot. Where am I at in this, and is it creating problems? And by recognizing your habits, by putting rules in place that will protect you, you can kind of reprogram the system. And that's the idea, is to basically make fewer mistakes and not keep completing those cycles and going down that path. Now, a great example of not living and hesitating, whether he's right or wrong, Warren Buffett is an interesting creature. Now, he's a long-term value investor, but if you study his behavioral aspect, he's just got control of his emotions and his behaviors, and he's got his plan, and he sticks to his plan, and he's just pretty amazing. And so let's talk about a recent example. Occidental Petroleum trades under symbol OXY. Well, if you go back a few years, Occidental bought out another company. They bought out Anadarko Petroleum. They needed capital to do that. They borrowed money from Berkshire Hathaway, Warren Buffett company, right? So they borrowed from Berkshire, and Berkshire sent them billions of dollars, and Oxy completed the deal and bought these energy assets and so on. And with it came certain things back to Berkshire. One of those is an 8% amount that they pay every year on the money borrowed. They also have some warrants, which are like options, some ability to buy the stock if it hits certain prices. Like I think the warrants have an exercise price at like $58 per share. So say Oxy goes to 70, 80, 90, Berkshire still gets to buy at 58, So they have upside. They've got this, income coming in, and they expect to get paid back that money. Well, what happened after Occidental bought out that company? Oil prices collapsed, right? Eventually, they went negative $30 a barrel. So, what do you think Oxy's stock was doing? Well, it was tanking. It was down in the dumps. And at the time, the stock was, 10, 15 bucks a share. Let's call it 15, somewhere in that range. And Oxy said, well, we need capital, okay? Oil prices are down in the dumps. We're in trouble. We got to make sure we make it through this rough patch. So we need to keep as much capital as we can. So part of the agreement was, well, instead of sending them cash, they could send stock. So Oxy kept paying 8%, but they sent stock shares, right? So they would send OXY stock shares to Berkshire. And Berkshire said, boy, oil's in trouble. We don't like the numbers. So what did Berkshire do when they received those Oxy shares? They sold them and they converted them back to cash. So Berkshire was selling the stock, receiving shares at 15 and literally selling them in the open market and converting it to cash. Fast forward a few years, oil prices have skyrocketed. They're at $100 a barrel now. They were at 120 or whatever. I think they're actually down today at 95. But anyway, they're massively higher from back here a couple of years ago. Berkshire's been doing work on Occidental Petroleum and saying, boy, they are heavily leveraged. Warren Buffett says he listened to the conference call and they're doing everything the exact way that he would do it. And so what did Berkshire start doing? They started buying the stock, and they were buying in the 40s and the 50s and so on. Think about this for a second. Now, I don't know if they're right or they're wrong, but they literally were dumping the stock at 15 when it was being delivered to them. And now they're putting billions of dollars at risk buying at 45, 50, 55. Why are they doing that? Because they don't hesitate when it meets their criteria. They don't live in the past. They don't live in regret. And even though they're paying 300, 400% higher prices, they just stick to the plan. You cannot live in the past. How many times have you taken a trade? I'll give you another example of hesitation. How many times have you traded a stock or a sector and you're trading it well and it goes up and you take your profits or your trade settles for a max gain and then, maybe the stock goes even higher? Have you ever done this? Well, I can't put on a new bullish trade here. I got out of my trade here, right? So I can't do that. So hesitation. Why? Because we think this is bad. We think it's bad that it's gone higher than where we got out. Does it matter? Not if it's going to go higher still. Remember, we're not buy and hold investors. We're not buying because there's tremendous value. We're trading the market mechanics of, if you're a trader, it's different than an investor, right? An investor just buys something they feel like is a great asset and holds long term. A trader is saying, does this lead to higher prices most of the time? If it does, what do I care that the other trade finished here? This one's likely to yield a positive result here. But you will, if you let yourself get caught in that trap of, well, it's already gone without me. No, there's no such thing, right? Not as a trader. As a trader, we like the adage, buy high and sell higher. You want to be working with the trend. And how long do trends last? Months, sometimes years. You can be trading the same asset over and over again, and don't worry about where your last exit was. Don't let that create hesitation. So hesitation is often due to a lack of confidence. It can be related to a fear of the unknown, prior bad experiences. Design some rules, put some things in place to build confidence in yourself, confidence in your plan, and to avoid hesitation. Hope you've enjoyed it. Have a great rest of your day, and we will see you next time. Goodbye, everyone.